Hello everyone, welcome back to the channel. Today we have an important update that many currency watchers, forex traders, and Vietnamese Dong holders have been waiting to hear. Over the past several months, discussions surrounding a possible Vietnamese Dong revaluation, exchange rate adjustments, and Vietnam's growing economic strength have once again captured the attention of investors around the world. In today's report, we will take a closer look at the latest developments. What is happening with the Vietnamese Dong? What experts are saying about the future of the currency, and what these changes could potentially mean for those who closely follow Vietnam's financial markets. Vietnam continues to attract significant international attention as one of Asia's fastest growing economies. Despite global economic uncertainties, supply chain disruptions, inflation concerns in various countries, and changing geopolitical conditions, Vietnam has maintained a strong position as a manufacturing and export powerhouse. This continued economic expansion has led many analysts to revisit discussions about the long-term value of the Vietnamese Dong and whether future adjustments could occur as Vietnam strengthens its role in the global economy. Recent economic indicators suggest that Vietnam remains on a solid growth trajectory. Foreign direct investment continues to flow into the country as multinational corporations seek to diversify manufacturing operations and establish production facilities outside traditional hubs. Vietnam's strategic location, competitive labor force, improving infrastructure, and favorable trade agreements have made it an increasingly attractive destination for international businesses. Many financial observers believe that sustained economic growth naturally raises questions regarding the future value of a nation's currency. As a result, speculation regarding the Vietnamese Dong has resurfaced in financial communities, online forums, and investment discussions worldwide. Some investors are asking whether Vietnam's economic success could eventually lead to exchange rate adjustments that reflect the country's growing influence in global trade. The Vietnamese Dong has historically been managed carefully by Vietnam's central banking authorities. Stability has often been prioritized to support exports, encourage investment, and maintain economic competitiveness. Unlike currencies that fluctuate freely in global markets, the Dong's movement has traditionally been influenced by policy decisions designed to balance growth, inflation control, and financial stability. During the past year, Vietnam has continued to demonstrate resilience despite various global economic challenges. Exports remain a major pillar of the economy, with electronics, textiles, machinery, agricultural products, and technology-related manufacturing contributing significantly to national income. The country's expanding middle class has also fueled domestic consumption, creating additional momentum for economic development. One of the key factors investors continue to monitor is Vietnam's trade performance. Strong export activity often supports a country's foreign exchange reserves and can strengthen confidence in its economy. Vietnam's ability to maintain robust trade relationships with major economies, including the United States, Europe, Japan, South Korea, and regional partners, has been viewed positively by many market participants. At the same time, policymakers continue to focus on inflation management. Inflation remains one of the most important factors influencing currency valuation. When inflation remains under control, it can support confidence in a nation's monetary system and encourage investment. Vietnam's authorities have repeatedly emphasized the importance of maintaining economic stability while supporting sustainable growth. Another topic generating significant discussion is the increasing role of Vietnam within global supply chains. As businesses diversify manufacturing operations, Vietnam has emerged as one of the leading beneficiaries of this trend. New industrial zones, logistics investments, transportation projects, and technology initiatives continue to strengthen the country's economic foundation. These developments have naturally encouraged conversations about whether the Vietnamese Dong could become stronger over time. Supporters of a stronger currency argument point to economic growth, export performance, rising investment inflows, and improvements in infrastructure. They believe these factors may create long-term support for the dong. However, economists often caution that currency valuation involves numerous variables. Economic growth alone does not automatically result in a revaluation or significant exchange rate adjustment. Policymakers must consider export competitiveness, employment, inflation, international trade relationships, monetary stability, and broader economic objectives before making major decisions regarding currency management. Investors should understand the difference between market speculation and official policy announcements. Rumors about dramatic revaluations frequently circulate online, especially during periods of strong economic performance. However, official changes typically occur within carefully managed frameworks and are often supported by broader economic strategies. Recent statements from financial experts suggest that Vietnam's leadership remains focused on maintaining balanced growth. Rather than pursuing abrupt currency changes, authorities have historically favored gradual adjustments that support economic stability while avoiding unnecessary market disruptions. This approach has contributed to investor confidence and helped Vietnam maintain a reputation for predictable economic management. The country's banking sector has also undergone significant modernization efforts. Financial institutions continue implementing digital transformation initiatives, expanding financial services, and strengthening regulatory standards. These improvements are viewed as important components of Vietnam's long-term economic development strategy. International investors continue to monitor Vietnam's stock market, manufacturing sector, technology industry, and infrastructure projects. Many global firms view Vietnam as a strategic destination for future expansion. Increased foreign participation in various sectors has strengthened optimism regarding the country's economic prospects. Meanwhile, currency analysts remain divided regarding the pace and extent of any future appreciation of the Vietnamese dong. Some believe gradual strengthening could occur if economic fundamentals remain favorable. Others argue that maintaining export competitiveness may encourage policymakers to continue prioritizing exchange rate stability over rapid appreciation. One important aspect, often overlooked in public discussions, is that governments frequently seek a balance between currency strength and economic competitiveness. While a stronger currency can increase purchasing power and reflect economic confidence, it can also make export more expensive in international markets. Export-oriented economies, therefore, often approach currency management with considerable caution. Vietnam's manufacturing sector remains one of its strongest economic engines. Factories producing electronics, consumer goods, industrial equipment, and various export products continue contributing significantly to economic growth. The success of these industries depends partly on maintaining competitive conditions in international markets. Another factor attracting attention is Vietnam's ongoing infrastructure development. Major transportation projects, port expansions, energy investments, and urban development initiatives continue transforming the country's economic landscape. Improved infrastructure supports productivity, attracts investment, and enhances long-term growth potential. Technology is also playing a growing role in Vietnam's economy. The country's digital transformation efforts have accelerated in recent years with increasing investment in innovation, software development, telecommunications, and digital services. These sectors may contribute additional economic value and further strengthen investor confidence over time. Foreign exchange reserves remain another important indicator closely watched by financial markets. Strong reserves can provide policymakers with additional flexibility in managing economic challenges and maintaining financial stability. Investors often view healthy reserve levels as a sign of economic resilience. As discussions surrounding the Vietnamese dong continue, Experts encourage investors to focus on verified information rather than speculation. Currency markets can be influenced by rumors, social media discussions, and unofficial reports that may not accurately reflect government policy or economic realities. For those following the Vietnamese Dong closely, several key indicators will likely remain important in the coming months. These include economic growth figures, inflation data, export performance, foreign direct investment inflows, central bank policy decisions, and broader global economic conditions. Each of these factors can influence market expectations regarding future exchange rate developments. The global economic environment also plays a significant role in currency valuation. Interest rate decisions by major central banks, international trade patterns, geopolitical developments, commodity prices, and investor sentiment can all affect currency markets. Vietnam, like all economies, operates within this broader global framework. Financial institutions around the world continue publishing reports highlighting Vietnam's economic potential. Many analysts believe the country's demographic advantages, manufacturing capabilities, strategic location, and ongoing reforms position it well for future growth. Such assessments contribute to continued interest in the Vietnamese Dong and Vietnam's broader financial markets. It is important to remember that revaluation discussions often generate excitement among investors. However, professional analysts generally emphasize the importance of realistic expectations. Currency movements typically occur over extended periods and reflect complex economic conditions rather than isolated events. Market participants are also paying close attention to Vietnam's efforts to strengthen economic resilience. Policies supporting investment, innovation, education, infrastructure, and industrial development may contribute to long-term economic expansion. These initiatives are often viewed as positive indicators for the country's future prospects. At the same time, challenges remain. Global economic uncertainty, fluctuations in international demand, inflationary pressures, and geopolitical developments continue influencing economies worldwide. Vietnam must navigate these external factors while maintaining domestic stability and supporting sustainable growth. For many investors, the central question remains whether Vietnam's economic achievements will eventually translate into a stronger currency. While opinions differ, there is broad agreement that the country's economic trajectory has attracted significant international attention, whether through gradual appreciation, exchange rate adjustments, or continued stability. The Vietnamese Dong remains a currency closely watched by financial observers around the world. As we move further into 2026, analysts expect continued discussion regarding Vietnam's economic future and the potential implications for its currency. Upcoming economic reports, trade data, investment announcements, and policy updates may provide additional insights into the direction of the Vietnamese economy and the Vietnamese Dong. Many experts believe that patience remains essential for anyone following currency developments. Economic transformations often unfold over years rather than weeks or months. Long-term trends, policy consistency, and sustainable growth are typically more important than short-term speculation. The latest outlook from many market observers remains cautiously optimistic. Vietnam's economic fundamentals continue attracting attention, and the country remains one of the most closely watched emerging markets in Asia. Strong manufacturing performance, expanding trade relationships, infrastructure investment, and technological advancement all contribute to positive sentiment. Nevertheless, official confirmation remains the key factor investors should monitor. Any significant exchange rate changes, monetary policy adjustments, or currency-related decisions would ultimately come through official government and central banking channels. Until such announcements occur, reports of major revaluations should be viewed carefully and verified through credible sources. For now, the Vietnamese Dong continues to be supported by a growing economy, increasing foreign investment, and expanding global economic integration. Whether these strengths eventually lead to notable exchange rate developments remains one of the most closely followed questions among currency enthusiasts and investors worldwide. That brings us to the end of today's special report. The Vietnamese Dong continues to generate significant interest as Vietnam strengthens its position in the global economy. While speculation regarding revaluation and exchange rate changes remains active, investors are encouraged to focus on verified information, official announcements, and long-term economic trends rather than rumors or unconfirmed reports. Thank you for joining us for this latest update. If you found this report informative, make sure to subscribe to the channel, turn on notifications, and stay connected for more updates on the Vietnamese Dong, global currency markets, economic developments, and international financial news. We will continue monitoring the latest information and bringing you timely updates as new developments emerge. Until next time, thank you for watching, stay informed, stay safe, and we'll see you in the next report.